zone will be 142.5, 142.5, whatever I got here. 140, yeah, 142.5, 142.75 for on the day 80. That zone, like 142.58.
So do you notice yen down 94 and gold up 12?
Well, Mr. Dale, when we entered the market this morning, euro yen was at its low and gold did not yet move. So I'm
saying it's US dollar yen.
I'm not playing that.
All right, okay. Okay, so it's I got lucky. This correlation worked today. Anyway, cable leading the way, Ryan. You guys like that you have an English channel between Europe and, between you and Europe in case there's any, even though people have told me, people have told me it's improbable. I was tweeting about this and they talk about the reactor having been drained or shut down and that there's really not a lot of radiation that could be released even if it got taken out. That it's contained, and all I know, it made me think about Bernanke, subprime crisis contained. So we'll see.
Well, I think Simon said it that it's not pressurized like Chernobyl was, so it's not it's not explosive. But nuclear fallout doesn't stop at coastlines, unfortunately.
Oh God, I forgot about that.
You're queuing up, waiting for a boat.
You have to go like to the space shuttle or something like that. Okay.
Yeah. I'm going
so your take on cable looks like it wants new highs here.
Yeah, we've seen it. It's remained well bid all the way through. Hike expectations keep increasing in the UK. We've even got some pumping the potential for 7% rates, which I think is bonkers. But we're well and truly pricing 6.5%, which I also think is bonkers. I think my view is that rates get up to probably 5.5%, and that'll be a top. And time is on the Bank of England side in terms of when inflation starts coming down, maybe from August. So I'm thinking if these rate moves continue and we see the pound going up, I'm going to start looking at proper shorts in.
All right. Euro, having a good day. I think Euro has a shot for where I think K-Man wants to sell above 110. Isn't that what you said last week?
It's had a bit of a relief this morning from those lows because we had a rare good number out of Germany with the factory orders a lot higher than the market were expecting. So had a bit of a relief there, and then I think it's also, this 109 is still a bit of a magnet in the euro dollar, and we are now ahead of 24 hours of heavy US data. And
heavy.
The market is
maybe their books short covering, maybe. The formation looks like a triangle.
Yeah, and it's short covering also, not only on the euro dollar, but you also look at a few euro crosses barring sterling. They are not coming off anymore right now. So I think it's a bit of short covering in the euro ahead of the data.
Okay, so I want to bring Stell in when it comes to yield. So even though the yen is dropping,
I don't think he's here.
He didn't. Okay, so let's hear your comment. People are calling this a breakout. So
yeah, well, technically it is one. You've broken the trend line, but then I guess 4 is going to be psychological, and again, 24 hours of heavy US data can change the picture or accelerate it. I was saying in the chat room, I said if the data hold up, they're probably going to underpin yields again, and then I guess the dollar is going to have a good end of the week. And inversely so, we can get back to 385 or break the trend line again to the other side if the data are really weak.
Okay. And S&P's down 24 handles.
Hey, I just
buddy.
want to jump in there. Good morning, guys. How's it going?
Good.
Hey,
Very
K-Man,
good.
and Ryan, and I know I mentioned this in the chat room, but this is I think important for the viewers here on the F.A.C.E show. We as yields rise and they're getting towards that that 4%. Everybody's kind of got their eye on that number. It's kind of like the make it or break it. But what's really interesting is the dollar has not been responsive up here.
Yeah,
so
that is a great point.
We've seen this. Yeah, we've seen this move higher in yields, and the dollar's been weaker. What do you guys make of that? Or is there anything that we should be making of that? By the way, DAX is hitting lows right now. Dow's hitting lows right now as I'm speaking. S&P futures just hitting new lows. Anyway, what are your thoughts there on this move in yields and the lack of response from the dollar? Or is there any? Do you guys have any thoughts on that?
Why don't you grab the charts, Blake?
All right, I'll do that.
Data dependency. Here we are. We've just had another round of PMIs in Europe and the UK for construction, all showing negative numbers. So you got manufacturing in contraction, construction in contraction, services which were doing well pulling back, and the US still isn't doing as bad as everyone else. So the natural reaction is you trade strength and you trade weakness. But the dollar situation is a bit interesting because it's looking a lot yen led rather than dollar led.
And they didn't do anything. Just had a sell off in the Nikkei. They didn't check rates. There's no intervention.
No.
Right. So that makes it even more. The move kind of reinforces that it's not news driven. It's just market driven with the Nikkei.
Yeah, and it could be just some positioning because we do have a lot of data out today, and the market's just getting it's getting out of some positions, maybe getting a bit positioned for the data. It's just a bit of jockeying around, but the move in yields, again, we had the Fed minutes pushing the case for rates staying up and further hikes to come. So there's no let up in that from the Fed. And the market's seeing that, but it's seeing crap data elsewhere. It's a balancing act. Who do you buy? Who do you sell? Who's going to be the worst or the least dirty shirt in the basket?
Yeah, but right now we're just not seeing the dollar be responsive, and that's interesting because that's a departure from what we've seen as of late, right? I mean, we'd see yields rally, the dollar rally, we'd see the dollar yen rally, and the dollar yen's on its lows. And you guys, I mean, I know you've been really vocal about all the data that's coming out over the next we got a lot today, and then the non-farm payroll, which is going to matter. We got ISM today, we've got weekly jobless claims, we got the JOLTS data, we got non-farm payroll tomorrow, so a lot of data could be a driver here.
ADP in 6 minutes.
Oh yeah, that's right. We have ADP in just a few minutes too, which we will cover live here. So the dollar yen, look at it, how we're breaking down through some support here. The 145 level has been obviously that big, level for from an intervention standpoint. I couldn't get the name right, but K-Man, you'll be able to square me away on this. Who's the BOJ person that was making a ruckus as we were nearing the 145 level about watching the markets? Which one of the
it wasn't the BOJ guy.
It was the MOF, right?
The government guy Kanda was out, and then we had a few of them: Matsuno, Kanda, Suzuki. They were all out. But yeah, I think it's just a case of managing positions ahead of the data. You had the yields move, but I mean, I don't want to sound like a broken record, but it's not because of yields moving all the time that the currency has to follow. I mean, this positioning as well. And I think what we're seeing in the yen is that probably the market was getting a bit too short yen, and then 145 cap. Then you have that Nikkei move. Then you have people needing to pay dividends and stuff, and that was just a drop that made the bucket overflow, and that's the move. And euro is just preparing the data, I reckon. And then sterling is what Ryan says, following the UK yields, which are rocketing. And I looked at it over less than 2 weeks. We've added 35 BPs, 38 BPs to the UK 10-year yields, which is quite a bit, and that's a decent repricing of expectations again. So. And
I mean, look at yields globally, and this is the
exactly.
point I made on last night on the trade-off. Was one of my topics is like, look at yields. It's minus
It's
Japan.
not only the dollar,
but yeah, I mean, you got yields rallying everywhere. You
So
know,
the- so then-
and you gave me the answer that I was actually searching for, K-Man, is that the market, even though yield, well, you got bonds that are moving, but the market is finally getting responsive to like, okay, this is the holy shit moment. Oh my God, yields are going higher everywhere. How in the hell is the market going to cope with this? And it's not. Frankly, it's just not. And you're going to start to see markets really come under pressure. When I say markets, I should say, I should reference equity markets are really going to start to come under pressure as yields start to rally and bonds crack globally. And that I think is what we should all be looking at right now. So, I mean, I just need to throw that out there. So is everybody awake? Anybody there?
Yeah,
Did I
but
break this thing? Hello, is this thing on?
The opposite could actually be true. If you get really bad numbers this afternoon, what are stocks going to do? Rally? I mean, perhaps the algo move is going to be a rally, but then afterwards, I don't know. If you, well, especially tomorrow, but if you see like the labor market, which is one big domino that is still standing, if that starts to falter, I don't see how stocks can keep up.
Yeah, that's exactly it. I don't see where the, and again, this is the point I made last night, and I don't want to sound like a broken record for those of you that listened to the trade-off last night. If you didn't, you can go back and listen to that with the Pepperstone show I did with Chris Weston. Look, we're at an inflection point where if you're an asset manager, you're looking around going, shoot, man, do I really get long, S&P up here with, PE, multiples where they're at, when I can just, plow into, the bond market and get yields. I can just capture a guaranteed yield at whatever end of the curve that if you're an asset manager you're looking at, just shift gears a little bit. I mean, the risk reward is just not there anymore. And so I don't know if bonds continue.
Yields don't go up if people are buying them.
Huh?
Yields don't go up if people are buying bonds. Yields go up because people are selling bonds.
No, I know, but they're going to get to a point where people start saying, I'm just gonna, buy some bonds down here. Right? No, I understand the as bond prices go down, yields are going higher, but it will start to attract. Right, you're going to start. It will. So,
and it will happen. It will speed up if we start seeing further economic and deeper economic weakness.
Yeah. It's a really interesting. Like I said, I think that we're in a really. Oh shoot! I got to get to this data.
15 seconds.
Well, how many seconds?
Get clicking. There he is.
Shoot. The day. How much time?
7, 6, 5, 4. 3, you're gonna blow it. 2,
ignition.
479, 497,
497.
497.
What the? I mean, come on.
Ridiculous.
Come on.
That's a bit ridiculous.
But this is private too. This isn't like BLS data. This is private data.
That's hilarious.
That's crazy.
Through 4% yet? Yeah, there they go. Gone.
Did we get any revisions?